All right. Hello, everybody. Welcome back to another Market Open. We have a very important day today. Today is February 1st, 2023. First of all, congratulations for surviving the first month of the new year. January is over. January was a hell of a month for me. Very interesting month. A lot of things happened in that month, but overall, that month is now done. And we are into February. Guys, hello. Papa Powell will give us a spanking for being naughty. Kane, what's up? Philip, Vincent, Cash King, Philip, Alvarado, Jason, good morning. Thank you all for being here. We've got a lot to talk about. We've got the Fed. I believe at 2 p.m. today or 2:30, the Fed will be talking. Jerome Powell will be talking. But additionally, with the Fed talking, you've got Palantir that started FoundryCon. FoundryCon was one of their first events they did in November. They had companies like Tyson come up and actually present, in the CDC and all these different organizations explain why they're using Palantir Foundry and the ontology, why it's so special. And they're doing it again. And I think, every couple months, if they keep doing events like these, it's going to serve as a great way for C-suites to get an understanding of the product and potentially get more deals. So it's going to be really exciting for a lot of things that are going on. Tom Brady retired today? Really? Okay, there's so much. Sonam, what's up? Damien, Cash King. We'll talk about Snapchat earnings in a second. Imran, what's up? UCUS, Vincent, good evening, all 3:30 a.m. my time. Thank you still for being here, Vincent. It means the world. Good morning, Mitch Schiffon. Have you seen the crazy MGM stock run? I have not, but let's pull this up right now. So we'll talk about Snapchat. We'll talk about AMD. Look, obviously, I think Snapchat is just not in the best position as a company per se, primarily because it's not their fault. It's just the nature of the product at this point. I don't think that many people care about it. Let's go to Webull. MGSM. Let's look at that. Wait, what was this stock? It was MGM. MSGM. Okay, let's look at this one. MSGM. Wait, what? This thing is up 713%. Hold on. What's the 1 year? It was up. Wow. What is this? It was at 254. Now it's at 27. Why is this stock rallying? What do they do? Motorsport Games Inc. This is and what's the market cap? 170 million. Okay, so there's definitely some level of a short squeeze or some level of a Reddit community coming together. This is how we know we're in a little bit of a bubble, just a little bit of a bubble. That's insane. Now, the obvious thing to do would be to short this right now, but what if it goes to 30? What if it goes to 40? Which is what AMC and GameStop did, right? This is the hard part to deal with this. Oh my, that's insane. Wow. All right, well, yeah, the only advice I have on this is stay away from this stuff, because obviously a short on this is epic, but it can pull it. Like, I have a friend who bought BBBY puts, and it's still, it's still at $2.80. It's still up 100% from the lows. It was up, I think, 400% at one point. So, his puts have not printed, and that's primarily because there's a community around the stock that is able to hold it up, and that's the problem with a lot of these, or trying to short a lot of these retail-driven rallies. So yeah, that's wild though. Let's go to Snapchat. So let's talk a little bit about Snapchat. They missed on daily active users, 300. They're actually up 4%, or sorry, they're down 12% pre-market, $10 right now. They missed on DAU, so they had 375 million DAUs versus 375.3 million DAUs. They missed on revenue by about 100 million. EPS, they beat slightly, 14 cents versus 11 cents. Look, Snapchat to me is a company that it's not exciting. It didn't even hurt Meta. If we go to Meta and Google right now, Snapchat was down 15% after hours. Meta barely down 1%, and then Google barely down 1%. And I think it's because people have recognized that Meta and Google have advertising infrastructures that are fundamentally different than Snapchat. Snapchat is for the generation before Gen Z, right? Or that's after Gen Z. It's so young that they don't have any spending power, so they can't really buy anything. So advertisers aren't really getting a bang for their buck. And then it's just the messaging gap at the end of the day. The other reason Snapchat sucks, and we talked about it on the Daily Cabal today, that you guys will see, is discovery, right? There's no followers. You can't even comment on their TikTok competitor, which is Spotlight. And so at the point where you don't let people centralize attention and then monetize that attention in a way that's meaningful for them, you basically come up with a product that's crap, because people are only going to use it to send messages, and sending messages isn't the most exciting reason to use a product. Snapchat got replaced by TikTok. Yeah, I mean, TikTok took a lot of energy from Snapchat. At the end of the day, Snapchat just, it's just a messaging app. It's not like TikTok is where you can build a career as a content creator. Snapchat is not. All right, before the market opens, let's listen to what we can expect from the Fed today, and then we will open the market and see how they react to JPOW.
Fed just hours from the release of its statement and the Fed chair's press conference. Senior economics reporter Steve Leisman joins us now with a look at what the Fed might and might not say. Steve, so a communication challenge always, but maybe more so this time.
Yeah, big one today. The first clue, Mike, I think you want to look for after the Fed, as expected, raises the funds rate by 25 basis points. Whether the policy statement repeats the phrase that the committee anticipates ongoing increases in the funds rate. Its removal would be a very dovish sign. The Fed is at least getting ready to pause, but it's not widely expected. Thomas Simons over at Jefferies writes, Fed officials do not want the market to think that the downshift to a 25 basis point meeting pace signifies the end of the tightening cycle. And that's likely to be a theme in the statement and the press conference, a market that wants to hear the Fed is done and a Fed unwilling to tell the market what it wants to hear. Another thing to watch for is how much concern the Fed chair expresses with loosening of financial conditions and what we're calling this 66 basis point gap between the market's year-end forecast and the Fed's own forecast of 5.13% for the funds rate. If Powell feels the need to tighten conditions, he might talk about the need for additional rate hikes or holding for longer. The trouble is the data seems to be undermining the Fed's own case for tighter conditions. The Fed forecasts 3.1% headline inflation this year. It's now at 2.1% on a 6-month annualized basis. For core, it forecasts 3.5%, and it's now at 3%. So the Fed has been achieving its goal of reducing inflation with a lower funds rate than it itself forecasts. Question is, why doesn't Powell just declare victory and go home? Or does he, as it seems more likely, continue to defend the 5% target? Mike?
All right, so that's what we know is going on with the Fed. And Tom, you said sound of video is much better. I did one thing last night. I replaced my monitor. So for the past month, I've been using this monitor that it was so choppy and I'm like, this is a really nice computer. I don't know why the monitor is being choppy. It pissed me off so much. And last night I finally replaced the monitor, and I think things are a lot smoother now, at least navigating. There would be some moments I would just try to navigate from one tab to the other, and it would just be stuck for literally 30 seconds. And I'm like, this cannot be happening. I need to do stuff. So we replaced the monitor, so hopefully it's a little bit better. But that's what the I think people are expecting 50 just because that is what the Fed has consistently told us. If we get 25, I do feel the market will run a little bit at least. If we get 50, I don't know if the market necessarily collapses. I think the market more so is all right, this is what we expected. And we might go down based on how hawkish Jerome sounds in the meeting. But I don't think it's necessarily going to send the market crashing because it's kind of baked in. We kind of expected it. The problem is, look Spotify, where it was at $79, now it's at 112, right? I mean, Meta was at 88, now it's at 148. You've had stocks that have just been hammered down so badly that they've made a substantial comeback, even if they're still down. Like Meta, is at 340 at one point. It's still down almost more than 100% than it was before. It's still here, right? It's still here, and as a result of that, that's important. It should be 25. Dude, when are you gonna change the interface? Once that order comes in from Amazon, Chris, that's when I will change the interface. I'm making some nice views on his Palantir videos nowadays. Yesterday's video, I hope you guys enjoyed it. It seems like I was the only one who was covering the freaking the Foundry marketplace, but we'll talk about it on the Palantir Weekly, so it'll be good. All right, 9:30 a.m. February 1st, 2023. We're done with the month of January into the month of February. The stock market is now open. Wake your ass up. The stock market is now open. We've got Google at $100, 0.21%. Meta down 0.39%, 148. Google and Meta not affected by Snapchat earnings. Snapchat at $10.09, down 12%. It was down even worse yesterday, so it's making a little bit of a recovery in the opening market than it was from yesterday being down at around 9:30. Tesla 173. Tesla's just been amazing. It has not gone down since earnings. It's maintained its ability to stay up. So the market likes Tesla. 39 on GM. GM is up because the market likes GM as well. Now, GM, I thought they had a decently good quarter, 25% beat on EPS, $3 billion beat on revenue. Obviously, most of that came from ICE vehicles and not EVs. They were only able to sell 36,000 EVs. So if EV is the future, GM, I don't feel is prepared at this moment for that future. And so I think if, as a shareholder, you're not worried about, the money they made. You're worried about how they're going to be able to deal with that in the future. And we talked about that on the cowbell today. Palantir at 779, 780, doing very well. We have FoundryCon today. So a lot of you will be able to see all the different stuff that Palantir is doing. Amazon at 102, Uber at 30, Shopify 49. Now, Kathy Wood has been trimming Shopify pretty reasonably. I think she sold about 200,000 shares or close to that in the past couple of days. I think she likes the run up from 32 to 50, and she wants to allocate that capital in some other places. It's been very interesting what she's been doing with the ARK F portfolio. So Shopify, she has been selling. People have asked me my take on Shopify. I'm not that bullish, to be honest. I love the platform approach. I do think, though, at a $61 billion market cap, and I don't know, it's like, yes, it's great as an e-commerce platform for entrepreneurs. It's just how much more can they grow that ecosystem, and how many more percentages can they take from that ecosystem in order to really become like an Amazon type of, an Amazon type of Prime. Amazon doesn't make any money off the retail thing. They made all their valuation comes from really AWS and Prime. So at that point, Shopify doesn't have anything like that. And I think they would really, at the end of the day, Amazon takes a percentage of everything sold on their website, and so does Shopify, but Amazon has everything else and Shopify has nothing else. So I think Shopify really has to diversify and do something more innovative for them to justify that stuff. Cool. Okay, let's change these to a minute, but not a day as well, so you guys can see exactly what's going on. ARK Innovation at 40, crossing 40. That's awesome. Rocket Labs at 4.9. Toyota at 147. Roku and Zoom. Let's take a look at those. 57 and Zoom. I think earnings for these two are next week or the week after that. Nothing really exciting has come out about Roku and Zoom, and I think that's why Kathy has not talked about it as well. Oh, speaking of Kathy, by the way, AMD up 4%. Awesome earnings for them. Pretty much met all expectations. It's not a semiconductor thing. It's a Intel thing. Intel just sucks. AMD and NVIDIA doing pretty well. Kathy Wood put out a report yesterday, her second or seventh edition of Big Ideas. Shopify still undervalued where its price is right now. It might be undervalued, but I don't know. It's just not exciting for me to want to be a shareholder for that company. Like if I think of like Shopify versus Tesla, I'm like, why would I not put a Tesla versus Shopify or even Amazon? Kathy Wood put out Big Ideas, and she thinks there's going to be, and let me show you guys this. Is it true that Amazon will not be profitable this earnings? I don't think that's the case. I hope that's not the case. Amazon is very profitable. In certain divisions, they're not profitable on, but AWS is like, it just prints money. $200 trillion by Kathy Wood. So today, ARK Invest published the 7th edition of Big Ideas 2023. According to our research, the market value of disruptive innovation platforms could scale 40%. That's a CAGR of 40% at an annual rate during the cycle from 13 trillion today to 200 trillion by 2030. From AI and multi-omics, I think that she means genomics in there, to blockchain technologies, energy storage, and beyond. Big Ideas 2023 details ARK's forecast for these technologies and the powerful convergences between them. The future of investing is investing in the future. Be on the right side of the change. With many thanks, blah, 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 blah. Okay, now look, 200 trillion might sound crazy, but one thing that ARK is correct around, even if they're not correct on the $200 trillion, is you want to be on the right side of change. Like the Fed has messed up everything. We get that. But AI is happening. Genomics is happening. Blockchain, I don't really know if that's happening. She's not going to get all of that. But AI and genomics are definitely happening. And so and robotics, right? And the converging between even those three sectors, I think can lead to an explosion of just opportunity and deflation. So she's correct on that thesis. The question is it $200 trillion worth? And is it going to happen to the company she picked? And so I'm not necessarily sure. Amit, are you waiting for a pullback to load more shares? 1,000%. I am not buying right now. I'm absolutely waiting for a pullback. Let's see today. I mean, I want today to be the pullback. If today we get a decent drop because the Fed talks, then I like SoFi. I would like that at 5.5. I don't like buying it at 6.90. I think it's a bit pricey at 6.90. Not long term, but short term, I do not like SoFi at 6.9. I'd like that at 5.5. So if we can get that there, we can get Palantir debt back down to 7.2. That would be nice. I mean, Palantir was at 5.97 the other day. We should be able to get these stocks lower. And we should really be welcoming these stocks to get lower. There's no reason in February 2023 we should want the start of a bull rally. And I think that's the mindset change I've had as an investor since last year. Like last year when stocks were dropping, like I was kind of sad and like depressed. And like, why are they? Now I'm just like, no, This is not the time to want a super green portfolio. It feels good, but it's nice to actually have opportunities to really buy. And I think a lot of us didn't buy as much as we should have in December when SoFi was at $4 and Palantir was 5.9 and Amazon was 85. Because all of us really thought the sky was falling. But if we get an opportunity again, I think a lot more of us will be prepared. Chris loaded up on Meta during that time, right? So he's one of the people, and he's up a lot of money on his Meta. So he took advantage of that. So it's just a question of what we can do. Morning, 2 questions. Why do we have colors on chat? And how is Gabe not seeing him about lately? Also, how is Tom? Why do we have colors on chat? I have no idea why you guys have colors on chat. I don't know about that. Tom is good. I talked to him yesterday. So he still has pneumonia, but he's getting better. I was on the phone with him yesterday. He's doing well. Gabe, I don't know how he's doing. Gabe obviously was short the market. His puts, we got to get the S&P to 360 for him to even break even. And so, we'll see. We'll see if it can get there. That's another reason I hope the market, not only can I buy, Gabe can get out of this trade without having to lose too much money. So hopefully that happens. He took a risk. At the end of the day, people take risks, and that's life. It's life. Bitcoin, not blockchain. That's true. Kathy says 1 million on Bitcoin. Let's look at Tesla. We said Tesla just went red, 170. Okay, Tesla's barely down. So Tesla went red. SoFi at 698. Netflix at 350. Yeah, I mean, look, the market. I don't think Netflix at 350, Spotify at 112 makes a lot of sense. So I do think some individual equities have a way to go down. And I do think there's going to be a lot of day traders today trying to play with the market and hope the Fed says anything that can get them some scalping on these trades. NASDAQ 11,554. So that's interesting. All right, let me load up. It's called gambling, what Gabe did. Well, I mean, Gabe, you can say it's gambling, but I also think he was trying to be logical about I think he was just wrong, right? As of now. But I don't necessarily think he was gambling. He had a lot of reasoning for this. All right, Kathy Wood is on CNBC. Let's hear what she has got to say. Let's load her up, and this is what she's saying.
Joining us right now, first on CNBC, is ARK Invest CEO and CIO Kathy Wood. Kathy, it is great to see you. It has been a heck of a month. It's been a heck of a 2 years. It's been a heck of a 5 years, frankly. We've been talking sort of about all of it. But also, I know you have some new ideas about what's going to happen this year and maybe some of your best ones. But before we get to that, I'm just sort of curious your broader context in terms of how you're thinking about the market and how you're thinking about your own performance, both in the January period, we got the Fed, the backdrop of the Fed is part of that, but also just the larger backdrop over the past couple of years.
Sure. I think what we've been through is a very big inflation and interest rate scare that hit long duration assets incredibly hard, including long-term bonds. Last year, the worst performance in the bond market since the 1700s. That's how bad this was. And of course, that was going to really hurt our strategies. But we do believe, and we have been saying for some time, that the inflation is unwinding. We think the market is leading the Fed, the bond market. I think we're down to 3.5% today on the 10-year Treasury bond yield. The bond market is basically saying the Fed is close to the end of this tightening move and is also saying that inflation will surprise on the low side of expectations, which means when we look back that the past 2 years inflation issue and interest rate issue has been a function of massive supply shocks to the system. And I noticed that even Janet Yellen this week said that she believes that inflation is probably going to surprise on the low side and stay there and might even become a problem. Larry Summers, same thing. He's saying, wait a minute, the economy is much weaker than I thought. So I think we're close to the end.
So you think Jay Powell is going to, and in terms of the language Jay Powell might use later today, you think it's going to be a little softer rather than sort of a hawkish tone?
You know, I have no idea. I don't know. I've been surprised at how unanimously this Fed board has voted, given how weak its own Federal Reserve Bank districts are, according to their own reports. So I don't know. I do know that the market is leading the Fed. And I also know that innovation solves problems. And we have a lot of problems now, including the Fed being so tight and activity becoming so weak in so many areas. So, we put out big ideas last night. These are our big ideas 2023. Very excited. And the first one you see there is artificial intelligence, which of course, ChatGPT has finally caught the public's imagination. We've been working on artificial intelligence for a long time now. And I think some of the things we're seeing are just the beginning of the impact that artificial intelligence is going to have on every sector, every industry, every company.
Okay, so there you go. Kathy's artificial intelligence, ChatGPT. The one other issue I have with Kathy is like she uses a lot of buzzwords, and the only thing she has to show for her buzzwords is Tesla. She has nothing else to show for those buzzwords. But now, granted, if things play out over the next 5 years, I think she will have a lot to show for these buzzwords. But things have to play out for this to happen, right? 200 trillion is a lot of money, man. That's like, wait, what is the global GDP? Global GDP. Okay, global GDP is 80 trillion. So, oh no, wait, hold on. Yeah, around about that. So you want to double global GDP with more than double that with AI, with ChatGPT. I should ask ChatGPT, how do we double global GDP? ChatGPT is like, just keep asking me questions. It'll happen. Oh man. Well, look, if like something like a Ginkgo Bioworks scales, something like a CRISPR Therapeutics scales, something like Tesla really transforms the world. Yeah, but think about how many little companies there are that could actually change the world. Like Tesla with FSD, that might actually create massive deflationary pressures, but there's like one Tesla for every trillion companies that try to do that. Like Ginkgo Bioworks, maybe that changes the world really, but we don't know, right? It still has a lot of room to play out in terms of if their like Amazon platform like approach for biotech works out. Roku's not going to do that. Zoom's not going to do that, right? Meta's, with their AI, maybe they're doing that. NVIDIA, AMD, maybe with their chips. And like, it's just like what companies are actually going to create that deflation because they have so much technology that it necessitates a level of urgency for deflation. I don't know. With Tesla's the only obvious thing in my head that can do that. Obviously, the genomic companies are up there, but I don't know which of them win. So I think that's the biggest problem with that. Adam Bergman, shout out to my guy, Adam. Thank you for being here. I'm using it daily. I love you, man. Thank you for being here. I have Roku. It sucks. Roku channel trash. Yeah, I've done multiple videos on Roku. Look, like they are trying to be original content players and the original content sucks. And like, again, when the CEO of Roku, Anthony Wood, is like, we are going to win in the original content space because we have all these users that are going to watch our content. I'm just like, no, bro, no one, like people are going to watch Netflix. Like that's how it's going to happen. That's just how it is. Chris says Ginkgo is trash. Glitch Life says those are fighting words. Yeah, look, I agree. The dilution has not been good. Shareholder stuff. I'm really looking forward to this earnings because last earnings they crapped the bed. I really want to see how Ginkgo performs in this earnings. Remember, Kathy Wood has over 100 million shares of this company. So, obviously, either she completely messed up, like it's a Spotify where she just messed up. She had to liquidate $700 million of a company. It's a Palantir, which she messed up, which, by the way, can we talk about them? I should do a video on this. I should do a video on everything that has happened since February when Kathy Wood liquidated 37 million shares of Palantir. By the way, I don't think she completely messed up on Ginkgo. I think they have a couple more quarters to really prove that things are working, and we'll see. And if they're not, then maybe she starts selling. But she has over 100, almost 120 million shares. So I think their team has done enough due diligence to say, hey, this thing is going to play out in a bit. But so much has happened. I know when she sold, it was $12 and the stock is at $7. But just think about what has happened. Like, this is one of those companies where you actually have to be like, wait, what has happened since last February? And was that a good decision to buy Roku and Zoom over Palantir? Like over something that's helping Ukraine, over something that's saving BP and Tyson $200 million. Like, it's just insane to imagine that. It is absolutely insane. Kathy has money. She can afford to lose money. It's just absolutely insane. Roku maintains its market share by selling built-in units, cheap RCA and Westinghouse House TVs. Yeah, but they're yeah, and the problem is you can maintain market share, but where are you going to get your revenue from? And it has to be the advertising margins. And consumers still spend 8 hours a day on TV. I saw a chart of that yesterday. And so, like, yeah, people are watching TV, and there's a lot of room for Roku to disrupt that. It's just, why would they watch Roku ads versus like something else? That's the problem. Or why would they watch Roku's original content? That's also the problem. Meta earnings. Let's listen to what we want to expect from Meta. This is going to be big. Is Meta earnings today? Can someone tell me in the chat, is Meta earnings today? I think it's tomorrow, but let me know if it's today. Let's see some expectations.
Look at what investors should expect when Meta reports after the bell is Michael Nathanson, founding partner and senior research analyst for SVB Moffett-Nathanson. And Michael, good to see you this morning. Obviously, you know, it really depends on when you start the clock in terms of saying whether Meta is up a lot or down a ton, and what the psychology around it is. What are you expecting them to deliver numbers-wise today, and what are your clients really looking for?
Yeah, so great reference point. We've been positive throughout this whole downturn. We stuck with it at the bottom. People are expecting a similar type of negative revenue quarter for Meta in the fourth quarter, and probably a weak guide, right? So people are comfortable knowing that the fourth quarter ended slowly for advertising. The first quarter is not an essential quarter either. But as you get through 2023, Meta has a lot of opportunities to really accelerate growth. And we're seeing clients start to come back to Meta. You know, a big change for them was taking the costs out they did in the fourth quarter. We talked about that. The company felt like it was tone deaf to the market on the third quarter earnings. Then they came back with a big cost action. So people are optimistic. You know, they know the near term is going to be choppy, but you get through the first quarter and the second half of the story should be much better. That's why the stock's up. And we think there's a lot of room to run here.
And is it mostly that it's going to get better just because overall ad trends should bottom and improve, or because, you know, they're getting, you know, traction on engagement? And where's the improvement coming from? Or for that matter, just about, you know, being more disciplined on costs and having more of the earnings flow through?
Okay, so on the revenue line, there were two things that happened last year, or really a year and a half ago. One was the Apple change with IDFA. That was a $10 billion headwind. That's now anniversary. The second was the move to Reels. So they basically, as you know, changed format. They moved to Reels, short form video. That was not very well monetized in the beginning. It actually was a headwind. And you're about to see a turn. I think you're going to hear a lot about how Reels is going. All the data looks like it's actually picking up steam. It's still not well monetized, but our belief is as they've done with stories, they start integrating it better in their ad selling process, you will see an acceleration. So it's Reels and it's IDFA headwinds, currency becomes more favorable, and then your point of cost action, right? So you start lapping the cost actions. So, you know, it's very clear. And I think when the third quarter ended, they're optimistic about their top line. The market wasn't, but the company sounded like they believed that they're on the verge of a turn, which is something that you can't say at Snap, right? So this is, you know, 6 to 9 months ahead of where Snap could be, but we don't have a lot of faith in Snap's management to turn this around.
So obviously Meta having earnings today is going to be really exciting to see what they do. Chris had a really good comment in the chat. Zuckerberg said, managing the people who are doing the work. This is the management elite white collar class of Silicon Valley. These are people that, you know, so I have a startup, right? And so like I've been doing product management for the past couple of months because we're shipping out a new product and a whole new version of the app. And so it's literally just going back and forth and managing management. So that's a direct relationship I have with my engineers trying to get something to be very specific, right? So it's very one-on-one. In Silicon Valley, big tech companies, you have a manager that manages the managers that have to take control of all these managers that manage the engineers. And you just don't need that many lines of communication. In fact, it leads to more bureaucracy, leads to more inefficiency. That's why companies can't get new products out. And it also leads to people trying to save their ass, right? Because they're like, oh, it's not my fault. It's Joe, who's John's boss, that said this. And that's how they save themselves. And so I think Zucks is like we're a tech company. Zuck started Facebook by himself in a room in Harvard. You know, now he has all these upper level positions he has to deal with. And at the end of the day, they just have so much money. They paid so many people. You don't need those many people. You just don't. That's it. You just don't. Scarrett, good morning, Amit. Thank you for being here. AI-based digital ads targeting will create a huge moat for Meta. Yeah, look, at the end of the day, again, I like Meta not because of the metaverse. I like it because of the ads. The metaverse is a cherry on top, but there is nowhere better on the planet to get targeting for ads other than Google. And Google's going to have a lot of problems coming up soon, even forget search, with their cookies tracking that they're getting rid of. Like, Meta is an amazing platform. As long as they keep the users, and it's like, where else are users going to go to like access content? Instagram, Facebook, WhatsApp, it controls pretty much everyone's life. Even if you don't use one of the all three, you use one of them. And if you don't use all three, you're in the very small majority of people that don't use those products. You know, Twitter ads kind of suck. YouTube ads are great, but like, you know, you have to be engaged in watching a video. Like Facebook is the best place to advertise. And that's it. Managers, damagers. Exactly. That's a great line. Amit, how many shares of Palantir now are you holding other companies? Around about 3,000, like 40 shares of Palantir. I posted a picture the other day on Robinhood or on Twitter from my Robinhood showing my Palantir position. I think like 1620 average. I have SoFi, I have Tesla, I have 100 shares of DNA, and I have a biotech called PPBT that I've had for like 3 years. And I'm hoping that's my real YOLO play. Like if they get bought out by Bristol Myers Squibb, which I think they can because they have this drug called NT219, done a lot of research on it. Now I don't even look at it. I'm like, look, either the drug's going to work, it's not going to work, and we'll see what happens. That was one of my first investments. So we will see. Yo, my bro, is it worth watching the FoundryCon thing as a Palantir bro holder? So I might be live streaming it today. I was supposed to go to New York today, but I'm likely going to be going to New York tomorrow instead of today, just because of weather and some other reasons. So I might be live streaming Jerome. I might be live streaming Palantir. I don't know what. There's a lot of stuff to live stream, so we'll see. I'll probably be live tonight, but tomorrow I'm not going to be live the whole day outside of the morning open because I will be in New York tomorrow and Friday. But today I'll be home. And we'll see that stuff. I mean, needs a lineup. I'm gonna go get a haircut right after this. I also need a lineup. That's another reason that I need to get that done. Good morning, Mint. Let's go, TJ. Thank you for being here. If Meta bought P Hub, it would control 100%. Oh man, shout out to Simon. Guys, that company that will you be streaming FoundryCon? We'll see. I don't want to promise yet, but probably because it's a live YouTube stream. So I'll probably just stream it on my channel. So don't watch it on Palantir's channel. If I stream it, watch it on my channel because I'll add some commentary during it too. This website gets 2 billion visits a month. Now, to put that in context, Netflix gets 2 billion visits a month. And the website that guy just mentioned that Meta should buy gets 2 billion visits a month. Like, I didn't realize how much of the internet is just the P word. I really didn't realize that. I was working at the top websites the other day. Like 7 of them are these P websites. And I'm like, what's going on? Like, do we just, is that what people do all day? They just watch that stuff. Like, what? Like, wow. I will wonder if you take those websites DAUs and you compare them to the biggest tech companies in the world. I feel like their DAUs have to be way better, bro. There's no way Snapchat's got better DAUs than that. And Snapchat really is a sexting app at the end of the day. You know when I started first using Snapchat? What is the P website? Well, I'll let you figure that out. I used Snapchat in 2012. There was a girl named Samantha. Okay. This was a girl that I was basically in love with, but I was so stupidly in love with. When I say that, I'm saying metaphorically because I was literally a kid. I was like 12 years old or whatever, right? But she was like, hey, download Snapchat. I downloaded it and Snapchat was buggy. It was barely working. And I was like, holy crap, we don't have to text. I could like see your face. And so the Riz in me, the Riz God in me was like, oh, this is a great way to like talk to girls and like show them your personality and stuff. And so that's when I started using Snapchat. And I was a DAU for years. I mean, I was using Snapchat as a way to talk to that girl in particular. But then, you know, I stopped using Snapchat because I didn't care about it, you know, and so it's just like for that generation, it's so exciting because like, oh, the first time I'm talking to a girl, I can see her face, blah, blah, blah. And then you move on and you're like, well, why is that important? Why does that matter? Why would I ever click on these ads? Why do I even need to post something on my story if I can't even get any followers? Like then you, as an adult, you're like, this thing is stupid. This doesn't make any sense. And so, yeah, that's the main thing. Chris, I'm not going to share your comment, but I hope you enjoyed. Okay, let's take a look at another video here. Let's see what we want to see. Let's actually take a look at this. There will be an upset in the market if rates stay at 5 basis points. So maybe the market rallies if we get a 50. Let's take a look at this one.
Joining us now on the market as we get ready to wrap up the hour is JJ Kinahan, CEO of IG North America. It's been a while, JJ. Welcome. Good to see you.
Great to see you, Kelly.
There is this huge debate we're all having right now. Is this rally a head fake or not? And how much is the Fed's decision today going to feed into that?
Well, you know, it's interesting, Kelly. When I look at our clients' activity, 2 things give me a real note of caution. The first one being Tesla, which, you know, I talked about a lot before, in the fact that it's a real barometer of retail confidence. It was interesting to me the 2 days before their earnings last week and for the couple of days after, saw a lot of bullish positions, both in the equity and call buys. 70% of those people who opened the positions have closed them. I combine that with what saw yesterday in the fact that people buying puts in QQQ, so for those not as familiar with options, again, You buy puts hoping that the market will go down, and you can sell them for a higher price. But in the QQQs, reflecting the NASDAQ 100, obviously, we saw almost 3 times as many people buying puts as we see on a normal day. I think that that's reflecting exactly the conundrum you guys have been, discussing all morning. Is Chairman Powell going to continue with his 5% talk after, if we're at a 99.3% or 99.7% probability of a 25 basis point hike? So after that raise, is he going to continue with the 5% talk? Whereas the market, if you look at the probabilities, is pricing in one more 25 basis point raise and then sort of slows down. So there's going to be I think, perhaps an upset in the market because of that. And it's very interesting to me that retail traders are already going towards that because they see perhaps an upset in there after he speaks.
So you think the Fed will win this round?
The old Wall Street expression, never bet against the Fed. They tend to have a lot of tools and money at their disposal. And even if you think, they're irrational, they can stay irrational longer than you can stay liquid. So it's really, really difficult to bet against them.
All right, JJ, I have to leave it there. Unfortunately.
We're going to see. Let's go back into the market. We will see. I mean, obviously, day traders are hoping for a nice little bounce or swing down based on what they're looking for. But let's put our final predictions in the chat. As the guy in the video said, he thinks there's a shot, there's 25. I think it's 50. I think it'll be 50. Put your predictions in the chat before we end the stream. Do you think it's 50 or do you think it's 25? I think it's 50. And guys, I think I've decided, I'll be live streaming this Foundry Con at 2 o'clock. I'll do that. So I will be there. I may, at like 2:30, I may stop quickly to talk about the rate hikes because we'll have the answer by then. All right, tell me something in the chat. Do you think it's worth live streaming Foundry Con or live streaming Jerome Powell talking? Which one would you guys rather like? Because to be honest, I've live streamed Jerome talking many times and it's pretty boring. Like, it's not that exciting. It's just him saying the same stuff. I feel like if I was live streaming Foundry Con, it wouldn't get as much of an audience as the Fed, but like, it's actually like people talking about Palantir and how they're using it. It feels like it's so much more important. So we can switch to Jerome for a little bit, but I don't think Jerome is like that important. Because again, after you hear 50 or 25, it's just the question where the market goes, and then that's it. Like, whatever he says is really, it's important, but it's just boring to stare at. Like, I was thinking about it last night because I was like, bro, this is just so boring. It's just 2 hours of staring at this guy answer the stupid ass questions from these companies. It's like, just not exciting. Where are we at? Where are Weeble? So let me know in the chat. Meta 147, Snapchat 10, Tesla 174. Tesla's up for the day. Big Bear up 4.7%. It's up 300% year to date. This is a pseudo competitor Palantir. They kind of work together, so not really. Look at Palantir, 796, inching up towards $8. Let me take a look at my Palantir position real quick. I didn't even look at this bad boy. See, and I don't like this. I would like it to be down back to like, $6. That would make me happier than having to buy it at 8. But granted, my average is so high, it really doesn't matter. Yeah, look at that. I'm up really nicely on the day. I am up $590 on the day. It's nice seeing Palantir get to this level. Not bad at all. I have to check my SoFi account. I haven't checked my SoFi account in a while. I think I'm green on one account in my brokerages. At least one place I'm green. What's your average cost? It's $16.20 on Robinhood. On SoFi, I'm about to check right now. What's my average on SoFi? Okay, you guys say FoundryCon. Everyone else is going to be talking about Powell. All right, so we'll do FoundryCon. We'll be doing FoundryCon. That might be a long live stream. That might be, and then we have Meta earning. If FoundryCon ends at 4, or even if it doesn't, we'll stop for Meta. Wait, does Google report earnings today as well? Everyone does earnings today, right? Google earnings. It's today. Google, Amazon, and Meta. It's today, right? No, it's Google's February 2nd. Okay, so then Amazon. Oh, I think Amazon, Google, and Apple are all one day. Okay, so we only have Meta. So we'll get to dive into Meta then. We'll get to listen to the earnings. Okay, so we'll do FoundryCon, then we'll transition to Meta, and then we'll go back to FoundryCon. So I might be live for a decent amount of hours. So we'll do that. Okay, hold on. Let me tell you the average on my SoFi account. Palantir doing nicely well at $7.95, $8 break. Let's see on my. Oh, $8. We broke it. On SoFi, at least it's $8. My average in SoFi is 742. I have 18 shares, so it's not that crazy. Not bad. What's my average on Tesla and SoFi? Oh, 174. So Oh no, 178. So I'm still down on Tesla on that. Okay, cool. So how much do you have invested? I think I told you guys this. How much percentage do you have invested? So I'll tell you right now. I am 35% in cash. Roundabout 35. So I'm 65 invested, 35% in cash. And that 35% is going to be for when we get some dips. So that is what we're waiting on. I also have to pay my taxes. Like I'm pretty sure I'm going to be paying close to like 5,000 in taxes for the year. I know to a lot of you that's nothing. To me, that's something. I got one of my 1099s yesterday. So I have to make sure I have $5,000 of dry powder ready to give to Uncle Sam so that he can go fund. What does Uncle Sam do? What do they fund? They're going to go fund. What's the dumbest thing Uncle Sam does with my money? They're going to go give it to Nancy Pelosi's salary so that she can make more money off selling Google before Google gets investigated. That's exactly what I'm paying for. That's what we're doing. All right. Is there anything else in the market? No, nothing else. All right. So that's pretty much it. So you believe that some stocks have bottomed? Which stocks are you staring at? I don't think some stocks have bottomed, Solomon. Some stocks. Yeah. I don't think Palantir and SoFi have bottomed necessarily. Like I think they can easily go back down another 20%. So it's not that buying the dip on these stocks are necessarily bad. It's just that like they could drop. Like they absolutely could drop. Meta could get back down to the 130s. Google could get back down to the 85s. Like again, it depends on a lot of these macroeconomic indicators. The only thing is inflation seems to be going down month over month, which is the Fed's concern. If the inflation continues to go down another 50 basis points in February, I think the Fed cannot do 50 basis points on the next rate hike. It has to be 25 because now inflation is really falling down precipitously. And if that's the point, then the Fed, when are they going to pivot? Now they're saying they're not pivoting until 2025. That's BS. Because at some level, if inflation is 2%, you can't destroy the economy, right? You have to start quantitative easing. You can't do any more quantitative tightening. What I've seen over the past couple of weeks is that this rally is a stimulus-induced rally in the money supply. I am not as knowledgeable for this, but I've seen a couple of videos explaining that that's the reason we've had some of this rally. I don't know if that's 100% the reason, but I think it's a part of it. And I think the other part of it is that people have realized that individual equities have just bottomed. We've had over 18 months of negative sentiment on some of these individual stocks. At some level, when SoFi puts up 480,000 members in a quarter that are spending 60% more on their services, where else are you going to put your money? You're going to put in T-bonds, or you're going to put it in something that can go up 18% in a day? So could it go down? Yeah, but could it not? Then, but could it go down further? Yes. Has it reached its bottom? I don't know. But is it at a good price? Then yes, I think it's at a great price. Palantir touching $8. Let's see. Oh, it hit 806 today. Okay. Let's see. Look, it can keep going down. It can absolutely, look at it, 798. It can keep going down. But at this price, I do believe a lot of these individual equities have, if not bottomed, been beaten up so badly that now they're down. Amit, do you think Palantir can drop 40 to 50%? Nah, I don't think 40 to 50%. That's a little bit too much. I mean, 40% would be $4. That would be a new low. No, I don't. Or that would be more like 50%. Yeah, like I don't think it's going that low. But I think, could it drop down to 6 again? Yeah, sure. It's just a question of like what happens in the macro. Remember, Palantir is not up because of the Microsoft partnership, because of the Foundry market. The market doesn't give a crap about that. Let's say earnings, they miss expectations. Palantir could drop 10% that day on earnings, and I would really appreciate that. Palantir is up because the market is up. That's it. The market is up. And Tesla's up because of earnings. Tesla earnings carried the market. If the market starts to get negative, Palantir will go down. Like, make no mistake about it. There is nothing intrinsic keeping Palantir up right now. And so ultimately we'll see, where it goes. All right, that's it. I'll be live streaming FoundryCon. Thank you, 346 people, for being here. I appreciate it with all my heart and soul. It means the world to me. FoundryCon, 2 p.m. today. I will see you guys there. We'll talk about Foundry. We'll talk about all the, it's really exciting to see the speakers that are talking. I'll give some commentary in between. We'll talk about the Jerome Powell and his decision at 2:30. We'll see how the market reacts to it, and then we'll talk about Meta earnings. So I'll be there for about at least potentially 3 hours, definitely discussing stuff, and we'll go from there. Layoffs are everywhere. That's another thing, right? So that's another reason why things can fall pretty badly as well. There's a lot of stuff. All right, thank you guys. I'll see you 2 p.m. Bye-bye.